Aloha, hey, it's Julie Ziemelis, 365 Hawaii and 365 Group on Keller Williams Realty, Big Island, and I am here with our monthly island-wide real estate update and mortgage update as well. And I'm joined with my teammates, Eric Ziemelis, my wonderful husband, and Jana Mahoney from Keller Williams, and we have Lance Owens from LUVA Realty. We've got Amber Haley from a Real Broker, and we have our mortgage partners, Scott and Marla Wynn from the Wynn and Eagan team. And we have a nice group of people here today, which is exciting because the market seems to be, I think it's shifting a little bit. We'll talk to Lance about that. But let's start with Jana Mahoney, who's actually going to talk about what's happening in Waikoloa Village and Waikoloa Resort area. So Jana, go for it.
Okay, let's start with Waikoloa Resort. We have 14 active listings right now. The average is $1.5 million. Last month we sold 5, and last year we sold 10. So the median this last month of the ones that sold was $1 million. Last year, 957.5. Not much difference there, right? Last month, the days on market was 36. Last year it was 3. So that's the big difference. Like we have this, like the prices are hanging out about the same, but the days on market is way, way different. The sales compared to, so the final sale price compared to the list price was 100% last month, and it was 100% last year. So that's not changed. So that's it. That's pretty interesting, I thought.
Yeah. So the prices are holding steady, right?
The prices are holding steady. They're just staying on the market longer in Waikoloa Resort. So that's this little area right here. 14 properties and 1 short sale. So I'm kind of adding that to my metrics that I'm going to share. So we do have 1 short sale now in Kolea, 2.8 million. And like I said, the median is $1.5 million right now. So in that tax key, the residential area is Puako, and we have 3 active listings in Puako, 2 for $4,950,000 and 1 for $22 million. So, you know, the median doesn't really mean much. There was 2 that sold last month. The median $2,744,000 on the sales. Average, now this is interesting. The average days on market of the ones that sold was 37 days. The average days on market of the 3 that are still on the market is 287 days. So what is that telling us? If you price it right, things are selling fast still. And the things that are
if you have a $4 million list, you might have to wait a while.
You might, yeah, that's what I'm saying. And the sales price to the list price was 94% for those 2 that did sell last month. So that's kind of interesting, I thought, what's going on there. So residential in Waikoloa, we have 22 houses on the market right now. So that's nice. We had less time. Oh, we had 28, so it's less. But the average price is $2,840,000. The median is $1,374,000, which I think is a little better representation because you do have a K Kailani for 14.9 that is skewing that average. So I think median's the better metric to look at as far as that goes. And so we looked at what sold last month. We had 14 residential properties sold in Waikoloa Village and Monolani last month. So that's pretty nice. Average days on market was 73. Average price was $826,714, and it was 98% of the list price to the sold price. So a teeny bit of a you know, it was that nobody even dared to make an offer below list price not very long ago, but now it's just a little bit less than list price. That's pretty good. Let's see. Oh, we actually have right now in Waikoloa, one foreclosure and one short sale.
Hmm.
One is for 710,000, the other one's for 980,000. I think that's kind of interesting because that's something we haven't seen, right? In Waikoloa Village, this is the condos instead of the residential. There are 24 right now. The average is $1.4 million. We have one that is an REO or lender. Sold last month were 16, median 715, days on market 29. Of the ones that sold, they were on the market 29. So again, the ones that are currently actively listed, the average days on market is 69. So if they're priced right, they're selling. The sales price compared to the list price here was 98.9. So very, very close to list. Last year we sold 22 at the same time period, the same month, and the average was $1,175,000, and days on market was 6. So these condos were selling fast last year, a little bit slower. So we went from 6 to 29 in 1 year.
Hmm. Yeah.
So,
In terms of, because I know we have some people who've been looking for condos in Waikoloa Village. What's going on with that? I mean, is there multiple offers? Or are they sitting there for a long time? Are you seeing price decreases?
So there's 2 of them today that have been on the market for 3 days in Fairway Terrace. You are seeing a few price reductions now coming in to there. Now the ones in Monolani, you know, those are, you can pretty much see if you look at the list of the condos in 368, there's pretty much a line of demarcation between Waikoloa Village and the ones that are in Monolani, even though they're in the same tax scheme. So, you know, you're starting off at Palm Villas. The least expensive condo in Monolani is Palm Villas at $1,030,000. And the most expensive condo in Waikoloa Village is in Waikoloa Villas, and it's $619,000. So it pops up a lot when you go down to the resort area.
Right. Just for some of our people looking for, you know, those the $400, the $400,000 condo experience. You know, is it showing up?
There's a $355,000 Fairway Terrace. There's a 389 Fairway Terrace, and there's a 409 Alimalani.
Mm-hmm.
So that's kind of what you have in that price point. Those are the three.
Okay.
3 that are 409 or less.
Okay. So for our luxury buyers, there's condos for you, and for our people just trying to get a foot in the door here on the island, there's something for you too. Okay.
That's right. And keep in mind the ones in Waikoloa Village are typically, some of them you can do short-term vacation rentals in them, but a lot of them you cannot. And it's just the other way around down in the resort. All of those are short-term vacations.
Right.
They can be. They can be, sorry.
Okay. Anything else?
Nope, that's all I have.
Okay. If anybody who's watching live right now has questions for Jana on the Waikoloa Village or Waikoloa Resort area, type it in the chat room and we'll make sure that we answer those for you. Okay. So, right now, actually, because Jana has to get going. But if you do have questions about that area, go ahead and put them in anyway, and we can get those questions answered for you later on as well. So thanks, Jana. I really appreciate you being part of it. Okay.
Thank you. Aloha. Bye.
Okay, Scott, this is the moment of financial truth. Let's see what's going on with the rates and what you have for us in terms of a slideshow presentation.
Sure. Sounds good. So I know I've been talking a lot about inflation, but I think sometimes it's hard to relay some of this information without having some things to look at. So I figured I'd share this and explain it a little bit better than I think I have in the past. So you can see this chart here, right?
Yep.
All right, perfect. So this is a historical chart of mortgage rates and inflation. So the inflation is the black line and mortgage rates are the blue line. So what you can see is is that inflation always spikes and goes up before mortgage rates do. And then when inflation goes down, mortgage rates follow. And so that's what I've been talking about for the last few times, is that inflation is the leading indicator of where mortgage rates have gone historically. So the next thing I wanted to point out is what's been happening with inflation. So the black line is what we have seen over the last 12 months. And then the blue bars are what we saw the 12 months before. So what we can see is that in October, we saw a significant drop. We went from the previous year sitting at 0.3 and went to 0.7. So we started to see decreases in inflation is the point here. And so inflation sometimes is looked at as just a single number, but what actually inflation is it's a addition of all the monthly numbers added up together. And so what happens is as inflation starts to come down on a monthly basis, then of course it starts to come down on an annual basis. So that's what this line is showing, is that we have started coming down and are now sitting at around that mid-5 range. But the piece that I wanted to explain even further is the fact that inflation is somewhat artificially inflated right now. And the reason for that is because of the shelter portion of inflation. So this chart shows Zillow's rent index. So they do a monitoring of what rent prices are doing. And so that's what that kind of orangish line is you can see that it kind of peaked in January of 2022, but since then it's been on the decline. But because of how rents are done, right? I mean, people buy eggs every day. And so the inflation numbers related to like groceries and regular day-to-day bills are very easy to be reflected very, very quickly. But things like housing and rents can't be reflected that quickly because people sign generally one-year leases. And so we've already started to see a decline in rent prices and also just housing in general. And so what is going to happen is there's a bit of a lag, basically a 6 to 12 month lag or so that occurs. And so you can see the consumer price index related to shelter is that kind of yellowish line. So it's still going up as of today, but you can see it's starting to kind of level out. And that is going to match with the leveling out that occurred with rents in January of 2022. So the point in all of this is that the consumer price index that's going to be released here on May 10th is likely going to start showing that decline in shelter costs, and that's going to bring the inflation numbers down. And as we've talked about, right, inflation numbers come down, so do mortgage rates. So that's the whole point of all of this. The other piece that I wanted to point out real quickly is that the Fed is trying to slow the economy, and they're doing that by increasing those short-term interest rates, which is bringing inflation down, but it's also likely going to put us into a recession. And a lot of people fear recessions because the last major recession that we've experienced was an impact to housing with the housing bubble back in 2007, 2008. But if you look at recessions over history, home values increased 7 out of the last 8 recessions. And during those same recessions, we saw rates decline every single time. So all of this information is great news for what is going to happen for housing and with interest rates because it's all going in the right direction. So hopefully that helps clarify a little bit in terms of where things are at, where things are headed, and what's going on with mortgage rates. So
very good. Thank you. That was awesome. Is there people, I know that we've got quite a few people in the Zoom call here. Does anyone have any questions for Scott on what's happening with mortgage rates and inflations or clarification on any of the charts? Okay, he was so good that there's no questions. Okay, good job, Scott. So that's
Scott,
really
Scott, that whole rent index thing, I've never been presented that. I really like that. That was pretty interesting on that. Thank you. I thought that
You're
was
welcome.
cool. I'm going to reach out to you to share that with me later.
Yeah.
Sure.
So May 10th is the big day, right?
May 10th. That's when the consumer price index gets released. And that's when we can start to expect that shelter portion is going to be included in it. And shelter accounts for like 32% of the core CPI, which is how inflation is calculated. And so as we start seeing shelter come down, those costs, like we see with the graph that's already being represented in real time, we can certainly expect that inflation is going to come down pretty quickly.
Okay. Jim says, sounds like the buy down is still a good idea. Can you give the short version of that?
So sure. So Jana mentioned that the sold to list ratio is sitting right around like 94, 95%, something like that. So that basically means that sellers are selling for less than what they list the home for. But one of the things you can do is, instead of asking for a sales price reduction, you could ask the seller to cover a cost of a buy down. So there's different buy downs. There's 1.0 buy downs or 2.1 buy downs, depending upon how many years you want your rate to be bought down. And then what happens is that money goes into an escrow account and buys down the rate. So on a 1.0 buy down, as an example, it buys down the rate 1 full percentage point on your interest rate for the first full year, and then it goes back to your note rate. So if, let's say, hypothetically, the rate is 6.5%, then the first year it would be 5.5%, and then the second through the 30th year would be 6.5%. So that's how the buy down would work. And then the seller could cover that cost for you, goes into an escrow account, so that every month you pay the lower amount, and then the difference between the 5.5 rate and the 6.5 rate is covered through that escrow account that's funded by the seller.
Okay. And then he
So
says,
hopefully
how much does that cost a seller?
So basically, it's the difference in the monthly payment, whatever that ends up being. So it's not a particular percentage, it's just the exact dollar amount. So again, it's hard to say, but let's just say that the monthly payment is $3,000 at the note rate. But if you did the buy down, maybe it would be $2,500 at 5.5 instead of 6.5. So that $500 a month, every single month for the 12 months, we put into an escrow account. So that's how that would work. So it would cost $6,000 in that hypothetical scenario. Whatever the difference in the payment is, that's what the cost of the buy down is.
Okay. That's good.
And we can help calculate that on each individual situation.
Yeah.
We have the calculators to do it very, very quickly and easily.
So that's, so contact Scott if you want to figure that one out. And also, somebody was talking about this today with the rates. It looks as if the rates are going to come down, and there's more buyers coming into the market now. And so the concept of the date the rate, marry the house concept of, if they want to get the mortgage now, Wynn and Eagan team said that you guys could refinance.
Right. Well, not only can you refinance, but we will cover the cost of the refinance if you fund your home purchase with us, right? So if you do that temporary buy down to help reduce the cost on a monthly basis during that first year or 2 years funded by the seller, then once rates do drop, when they do, hopefully, then at that point we can refinance and we'll cover the cost of that refinance, so that way you get the benefit of the lower rate when that time comes. So yes.
There we go.
Too. So once we close on their purchase, Scott typically is the one who reaches out, has a conversation, and they identify what the target rate is. And then when we hit that target rate, we already know that that's when we're going to do the refinance.
Oh, okay. So then you're the one who reaches out to people and tells them, hey, now's the time.
Mm-hmm.
Yeah.
That way they
Let
don't
them know what's going on in the market, and let them they ultimately decide when is the right time, but we'll let them know based off of what we're seeing in the market as to when we think would be the right time. And then they would decide if it makes sense or not to proceed.
So Scott, question for you. So it sounds like that if, let's say, the rates do come down, do you think we'll get more people back into the market because more people can now get in it? I mean,
yeah. I mean, every single time rates drop, it becomes more affordable. The more affordable it is, the more people there's going to be to buy, just because they are now able to, or because they figure that now's the time to do it. So I don't know the stats. There's some recent articles that I've read talking about there are tons of buyers sitting on the sidelines waiting for rates to come back down. And they're not going to hit where we were before, but we're probably going to get into the 5s, I would guess, probably within the next 6 months, maybe even the mid to low 5s within the next year. So I definitely think that's going to bring back a lot of buyer competition for sure.
So Robert had a question, and the answer to that question, his question is, what happens to the money in the escrow account if you refi before the term is up? And so if it's a 1-year buy down, 2-year buy down, or even a 3-year buy down, any balance that's in that escrow account gets applied toward a principal reduction. So it comes off the amount that you're going to do refinance. So you don't lose it. It's definitely your money, but it has to be a principal reduction on the next loan. I have a question too. Like, what do you guys think will happen to house prices when rates come down and there's more buyers in the market?
I think it depends on if the seller starts selling because now they can buy something at a decent rate,
Yeah.
then it's going to maintain them, as mine. But if they still hold out thinking it's going to go even lower, then it's really going to drive up high prices. But I had two questions for you guys, if I can ask them real quick. Well, I'll ask the more serious one first. So I'm just surprised at the to see the banks do this whole escrow account thing. I think it's awesome and wonderful, and you don't usually see the banks helping out the common person like this. And I just, where did that come from? Do you have any background? It just seems you never see them helping out people, and this is a great way. This buy down was never explained to us properly in the early days. And then you guys came out and explained it very well. That money sitting in that escrow account. So thank you. But any insight into that?
So this program's actually been around for quite some time. It just, there hasn't been a market for it for a really long time, right? So when I first got in the mortgage industry 21 years ago, rates were similar to where they are now, maybe even a little bit higher. And so affordability was a challenge. And so people did them at that particular point. But it's always been capable. It's just there hasn't been a market for it. So banks, I think, their escrow accounts can be used for many different purposes. And in some cases, banks don't like holding escrow accounts because of the risk associated with them, such as like repairs to homes and things like that, because then they have to inspect the home and make sure that the repairs were done. And then if it's not, it gets all challenging. But with something like this, it's very, very structured and it's put in place. They know exact dollar amount. They know exactly how much is going to apply and how to apply it every single month. And there's no risk associated with the bank. So I think that's why the banks are much more willing to do it in a circumstance like this, where they're not with like a home repair or something along those lines.
Yeah. Plus, if one bank's not willing to do it, maybe a different bank would, which makes that other bank a more attractive bank to do your home loan with, right?
Yeah, totally. Thank you. And my second half of the question, I think you answered it already, but was just, I had made a friendly wager prediction that we'd be in the mid fives by midsummer. And it doesn't look like I'm going to win that friendly wager bet, in your opinion.
I'm guessing probably not. I think we might hit the high fives possibly after May and June. When you look at the historical inflation numbers for May, June, July, August, they're much higher a year ago than they're likely going to be this year. So that's definitely going to put some downward pressure on interest rates. So I think that we will see maybe some bigger drops in rates, maybe into the fives, but probably not the mid to low fives by summer. We'll see.
Maybe pick a date right now.
I'm going to start saving my money, saving my lunch money. Thanks.
I say fall. Let's see. We seem to have a bunch of people thinking they're moving to Hawaii this fall because I think they're trying to time those interest rates. So cool. Okay, good job, Scott. And if there's any other questions about financing, just go ahead and put it in the comments for the people on live on the show. And for those of you who are watching YouTube later on, if you do have questions for Scott and Marla about financing and mortgages and things, I will also include their contact information in the description. So, okay, so let's go to Amber. To Tanya. Tanya's up, but we're kind of going like this up the island. So Tanya is going to be discussing the North Hawaii, Waimea, all that area region up there to Hawaii and all the way across to Waikoloa. So Tanya, were you able to get a video?
Thank you. No, the video is not working.
No video, so you
get
to listen.
My webcam gave up the ghost, so I'll get another one for next time. I do apologize.
Okay, just go ahead.
Great. Hi, everybody. So I'm going to be doing Hamakua, North Kohala, and Waimea. I'll start with Hamakua. In the past month, we've had 7 closings, and those have ranged from 449 to 1.39 million. Average days on market there was 72. Currently 24 active listings. This includes both land and residential. So it's a range from 225 to 1.684 million. In North Kohala, we've had 5 closed. Average sales price there was 1.622. Average days on market was 106. And there are 81 active listings. This is inclusive of land and homes. And those range from 325 to 2 million. And then moving across to Waimea and Waikiki Ranch, that little section, 12 closed, average price there was 813. Average days on market was 35. And there's 55 current listings at the moment, and those range from 219,000 to 3 million. And then I wanted to share a quick story, and then I'm going to have to go. Julie, you'd asked a bit about, what sort of questions we're hearing a lot from our clients. And one thing I just wanted to mention, I just had this pretty neat experience, actually. I've been working with some buyers with a very tight budget. They looking for a home 600 or under. And one came up, and as you can imagine, pretty fierce competition in that range. And they couldn't go any higher. So that's when you can get creative with terms, you know, waiving certain things, keening, if it makes sense to waive staking, that kind of thing. But what we did in this case is I really paid special attention to what the listing agent was saying. And this is a really sweet plantation home up in Pupuihaele. And the wife had been married to her husband for 40 years. They'd raised 4 kids together, and the husband had recently passed. So what we did is we decided to throw in an invitation to the seller and her family, because there's so much history in the home, that if in the future they were in town and they wanted to come and stop by, that they would be welcome to. And that actually got us the offer. So it's just creativity is what I wanted to suggest, that you can think outside the box. We were not the highest offer. They received at least 4 offers, all asking or over. And it was just thinking out of the box and making a gesture like that got us the offer. So just a quick story I wanted to share.
Yeah, because sometimes it's not always about the price.
No,
Right.
it's not. And that's what they said when they responded to us. So that was really neat.
That's cool. Hey, so Tanya, just in general though, on those numbers for your area, are you seeing kind of like what Jana was talking about, a 50% increase in terms of like a 50% decline in listings on the market, and prices holding steady in general?
In fact, I've actually noticed a few more items popping on the market, and I was wondering, maybe, I don't know, Scott and Marla would have something to say to this. I wonder, is people getting their taxes done? Is that making them want to list? I'm actually seeing more listings lately.
Yeah.
Down at the resorts too, Pulalani, up in Waimea, there's a few. We've had 3 Tamarack Pine condos pop up this month, and those hardly ever come up. So I'm actually seeing opposite.
Yeah. In fact, we had 14 listings this week to go on Broker Open. 14. I haven't seen that many people put their house on the market in 1 week in a long time.
I know, right? There's something in the air, and I'm not entirely sure what it is, but I feel like there's more inventory.
Yeah. So yeah, it'll be interesting to hear how it goes with Amber and Lance, to see how that goes around the whole island. Thank you, Tanya. Appreciate it.
All right, thank you. And then I have to go. So aloha. Thank you, everybody.
Which brings us to Amber. So Amber Haley is going to talk about what's going on between Hilo and down into Puna District. What's going on?
All right. Aloha, everybody. Okay, let's talk about the Puna District and the South Hilo District. So median home value, or median price right now, at least for March, so up through March, for Puna was $367,500. And average days on market were 77. So looking back to the month before, the median price actually went up a little bit. The average days on market was the same. Looking back to a year ago, we have a lot more days on market. Our average days on market in Puna was only 39 around March of 2022, as compared to 77 days on market right now. And the median price was actually just about the same as far as March goes. South Hilo, median sales price, that is, was 485,000, and average days on market was 56. So compare that to 470 the month before, and 50 days on market the month before, and 550 a year ago in March, and compare that to only 30 days on the market when stuff was selling really fast last March. The interesting thing about East Hawaii, I have been looking at the most recent sales for this month, since we are at April 20th right now. And it looks like for the Puna District, which is the part of Big Island where we see the most real estate transactions every month, it looks like our median price is dropping even more right now, that it's sitting at 331. So if you compare that to the end of March, where it was 367, that might be something to keep an eye on, because that's actually quite a decrease compared to what we've seen before. And then as far as, let's see, South Hilo goes, currently we are sitting at for April, $450,000 being the median value. So Gonna be interesting to see what happens. Again, I've been saying this for a few months, but I don't feel like it's quite enough data where we've seen these changes to, make big statements about what we're gonna see the rest of the year. But it'll be interesting to keep an eye on the spring market. Not a huge decrease in value, but again, April compared to March, that is the biggest decrease I've seen, again, especially in the Puna district. Our most popular subdivision that I'm getting the most interest in right now, and I would expect all of my colleagues to say the same, is Hawaiian Paradise Park. It is a huge subdivision located in LUVA Zone 3 over in the Puna district in East Hawaii. And let's see, I pulled up some fun stats for you guys. Right now, there's 56 active listings for single family homes, that is. There's a lot of land, vacant land for sale as well, but 56 single family homes for sale. The highest active listing right now is $750,000. I believe the lowest one is about $175,000. So we have quite a range of prices in Hawaiian Paradise Park. Your average, maybe 3-bedroom, 2-bathroom new construction is going to be about in the $450 to $600 range, just kind of depending on the level of construction. There's been 12 properties that have sold this month and 37 under contract in Hawaiian Paradise Park. So I know a lot of you specifically have questions. That one almost needs its own district here on the Big Island because it's got so much activity happening. But I'm always keeping an eye on HPP and all of East Hawaii. So if you have very specific questions, since there is such a range of houses and different lava zones and different things going on in East Hawaii, feel free to reach out to me for more specifics. But that is your general market update over here.
There you go. There you go. Thank you. Thank you. In fact, Eric and I were over there looking at a house for one of our people who are actually on the call right now, who actually got it successfully into a home over there. But we were surprised by the amount of new construction that are being put up all over HPP. And it seems as if a lot of it is the HPM kit housing. So it seems that trying to get an architect, Eric, I heard somebody say they got quoted $100,000 for an architect to design a house. And it seems that the way to go for new construction is just to go through HPM, which already has their designs approved, which makes it a lot less expensive to build those houses over there. So if you guys are looking for homes over there, you might see a similar structure of homes. And that's kind of what I think is going there. But Amber, is that kind of what you're seeing? Is you're not seeing a lot of spec housing, or do you see more of that stuff?
Yes, definitely a lot of the HPM homes. And if anybody doesn't know exactly what we're referencing, you could put that in a Google search, or I think their website might just be hpm.com or hpmhomes.com. But it is, they do have also some options for some homeowners that already have been like permitted through the city, so or through the county. So yeah, it is a really, really popular new construction that we see. So sometimes if you feel like you're driving around East Hawaii and you see kind of the same house over and over again, it's because there are a lot of those HPM homes.
Yeah.
I just got to tell you, I'm very happy with my HPM home. So
That's right. Lance has one too, but you made
Yep.
you made yours your own too.
yeah, we spent way too much money. We thought we'd be smarter, going with something been made 1,000 billion times, and it wasn't so much smarter to do that. So, but we love it.
That's cool. And any other questions for Amber on this one? Any questions? I don't know. Okay. And again, if you were watching this later, I will drop the contact information for our realtor and mortgage partners into the description, so you can actually contact Amber and ask her questions about what's going on in East Hawaii. So let's go to West Hawaii, and we've got Lance Owens with LUVA Real Estate, and he's also one of the vice president of Hawaii Association of Realtors, second vice president.
First vice president.
First vice president.
Right between those two, right? So thank you. And thanks, you guys. And I missed Delania being here. So I'll jump in real quick because I know Delania has her two favorite complexes. I got to pull the other one up separately, but the Pualani Estates, I know she always reports on, right? That's one of them. So in the last 30 days, we got one that was listed at $899. And it sold in 19 days for $920. So it sold over this price. And funny because it was her mother was the listing agent. So that was cool. And then there's one contingent right now listed at 864 and it's contingent. And there's a new listing came out 2 days ago, was on Caravan today. I wanted to go see it, but I couldn't. Listed at 989 and it's 1,200 square feet, 1,253
Yeah.
square
Well, I
foot.
saw the picture and the view was it was beautiful. I think
Yeah.
they're selling the view.
Exactly. Hakumeli is one of that road is right at the top of one of the steep sections of that subdivision. So, and it's funny because back in the day when these were new, there was a $25,000 to $35,000 premium on those homes when you bought it on that side of the street, and now it's like 120,000 a premium. So it's kind of crazy. And thank you, Marla. I do love my background. And Bob, I missed you last time you were in town, and I apologize. If you're in town right now, reach out to me, please. We were going to do lunch when he was in town last time, so love to meet up with our clients. So I'm going to jump in.
Will do, Lance.
Okay, thanks. I was trying to look at your background when you were on camera, if you were in your condo or not, and I think you were, but
Yes.
yes. Okay. All right. Thanks. All right, you guys. I'm going to jump right into the housing market, and we're looking at residential sales. I'm looking at this month alone, and we are at 19 sales for the month, and the median days on the market is 27. The average is 72. I don't know which one you guys like looking at. I like looking at that median because there's one that's been on the market for 253 days, and it kind of piqued my interest, and it was listed at almost 2.8 million. So, it was a higher priced home sat out there. It's hard to include that one, is why I like that median price. So 27 days on that one at 2.79 million sold for 2.5. And looking at those 19 homes, 19 homes that sold, 50% of them sold in cash. The rest of them were financed. There was one 1031, and then I counted as one of the cash ones because that was just an exchange. And we have interesting, the median price from original price is 93%. So that is huge.
It's
That's
going
a
down.
big, yeah, that's big. Sale to current price was 97, and that's what we've seen for quite a long time, 97%. So we definitely want to keep an eye on that. I think that 93 is kind of an outlier. So we'll pay attention to that one because, well, here's what makes me think of that. The median price right now is 1.22. So it's, the median price hasn't dropped. So we're tracking 30 sales this month versus 45 last month. And median price I said was 1.225. It was 1.15 last year. I'll jump over to condos, and condos, we're seeing a decrease in the median price. We have a median price is at 510 right now. It was at 572 last year.
Oh,
Again, we're 2/3 of the way through the month, so we'll keep a close eye on that, but that's a 10% drop. 50% of the 18 condos that sold so far this month have been cash also. So we're half cash, half financing, both homes and condos. So that's kind of it's an uprise in cash buyers. And one VA, and we're tracking 27, and we sold 46 last year. Same thing I think we're hearing from everybody is we have no inventory. I know Julie is freaking out. 14 came on right when she listed
freaking out.
her.
I'm going like this. Woo! At least that means more inventory. And he's like this. It's minuscule.
So we lost a bunch, but it is something to watch when you get 14. There was 12 on Caravan today, right?
14.
So that's a big. There's 14 on Caravan today. Oh yeah, that's right. They had some add-ons. Okay. So yeah, so that was that's very interesting, but we're still only at 84 when we should be at 160.
See, you guys, he is the biggest downer right there. Do you see what I'm talking about?
All right, I apologize on that one. So, but 4 or 5 months ago, we were at, never mind, that's just a downer too. We were at 100 active listings running consistently for several months. So again, we just got to watch closely. No sellers, no buyers. So it's keeping the prices up.
Yeah. Robert
Yeah.
Hampson says, why do they use the median rather than the mean price?
So, the interesting, because you got the median, the average and the mean. What is the mean again? I'm so used to median and average.
Yeah.
Yeah, mean
The
is
same,
average.
the same as average.
Median average,
Yeah.
Robert.
So
Yeah.
mean is different. Mean is sort of like the average, but it takes into account distribution and it throws out outliers. So if you had one house that was like $12 million, that throws off an average or a median, but with the mean, if it's an outlier, it would get tossed.
Okay. Yeah. I don't know, but I would have to, I can pull all these reports off my MLS and they don't have that information there. But that is a good one. And I haven't heard, and I apologize because I haven't heard that for so long. We have just been for 19 years, I've been given these two numbers, the median and the average. So, but that is a good question and I don't have an answer.
Yeah. So that's another thing talking about that is I looked at some of the price reductions, and when you have a $2.5 million house and it goes down $125,000 like one recently did, that's going to throw off, price to value. Yeah. Or is that kind of
Mhm.
stick it with it because it's a higher price? I mean,
Well-
like some of them are like they sell, I see like they sold for maybe like, I don't know, $10,000 below asking. But when you see $125,000 taken off, but that's a bigger price of a home. So
I think that's what threw off this and gave us that 93%, because that home that was on there for 200 and something days, 253 days, was listed at almost 2.8 and sold for 2.5. So that right there skewed, I think, that 93%. It should have been closer to the 97 because that was the only big one I saw.
yeah. Okay. And then also, in general, I think that, Eric and Lance, who are watching what's happening in West Hawaii, would attest to is that people are not throwing out $50,000 and $60,000 under asking and getting it, right? I mean, they're still selling pretty close to what the asking price is, right?
Yeah, I had a conversation off air, but I just had somebody that was called me up on a new listing that came out and wanted me to do, basically a 4-hour round trip by the time I went to the side of the island and viewed it and back, and wanted to write it at 50 grand under the list price on day 0. And I was just like, I'm not your guy. I'm not going to go do that. So let's revisit this conversation in a few weeks, maybe a month. But and if it's, and the big thing I try to convey to the person too is, I don't mind going out there and finding out that it's a piece of junk and don't put an offer in on it. But to drive out there and do a 4-hour round trip and an hour there, your day's shot, and you're going to lowball something that's it's just not there. And by the way, that house ended up with 4 offers by day 3, and it's in escrow over asking price.
Yep. In fact, I had my listing on the first time the brokers got a chance to see it, and I heard a realtor asking their client, you could hear her saying, "No, we're not going to bid $200,000 under asking." We are not in that market, so
Yeah.
yeah. So
They need to look at these numbers, and just kind of sit them down and be educated. So
yeah. And and now that I'm the more and more I spend in this industry, it's the realtor's job to price the house so it will sell in a reasonable amount of time, but not so overpriced that it's going to sit there for months. I mean, that's the thing, is that when you see some of these pricing on the home, there's a reason they're called comps. And so, when people say, "Oh, you're
to advise
Huh?
to advise their client on their pricing.
Oh, yes, I'm sorry. Advisor.
We don't set the price.
You're right. The person who's selling the house gets to set the price. And if they want to have some crazy amount of, that's
Yeah.
fine. So,
And most listing agents, will set a time frame. It's like, okay, we will try to hit your number. And then, on day 8, let's have a conversation, because on day 8, we should have had 20 showings, and we should have had, maybe an offer if we were priced right, and maybe multiple offers if we were priced well. And if you're at day 8 and you had 2 showings and no offers, you need to have that conversation. So, and some people will build that into the contract with those actual
numbers.
Price points in advance.
There we go. Okay. And thank you, Robert, for your description of the mean is simple arithmetic. Average. Thank you. It's always nice to have smart people keep track of what we're doing here. So, okay. So, if nobody has any other questions about the market, what I'm going to ask the panelists here is this question that we're going to go around the room here. What is the question that you get asked all the time, and what's the answer? And we're going to take it down to the bottom. Amber, are you prepared to answer that question?
Okay, what is the question that I get asked all the time?
And what's the
And
answer
what is
to that
the
question?
answer?
Yeah.
Oh, I get asked so many questions, but probably the thing I get asked the most about in East Hawaii is lava zones, and how that affects somebody's real estate purchase. It's just so relevant in East Hawaii because we have so much risky located property. So if you are concerned about lava hazard affecting your ability to finance a house or insure a house, you're going to want to keep your property search to lava zone 3 and up.
There we go. Thank you. And then just real quick, can you, if you had to tell them, how can you search if the house is in a lava zone? Is there like a website that you know off the top of your head that they can check?
Oh, how they can tell what lava zone? Yes. So if you're looking on like a Zillow or one of those that a lot of people like to use, that is not, like a website that is made for Big Island real estate. So I'm not even sure like how clearly, if at all, it's labeled if it's not in the individual real estate description. But there are lava zone maps available online. If you have a real estate agent set you up on a property search, they can set you up to only get listing alerts for specific lava zones. So if you're having a hard time telling and you can't tell which lava zone it is, another way to do is just reach out to a local real estate agent and ask them, because we can figure that out for you very, very quickly and save you some trouble. Another way to tell often is if the property is priced ridiculously lower than you think a house should be, it's probably due to a risky lava zone, but you're going to want to check for sure.
Okay. Thank you. Thank you. Which reminds me, Eric had something to do with that one. Eric, what was your question that you get asked a lot?
Well, that ties in with what Amber was saying about the idea is why is some houses priced so much differently than other houses? And the answer is there's usually a reason. It's just all of a sudden somebody isn't pricing their house dramatically less just because there's the reason. And lava zone is probably the most blatant example of that, is that it can drop, just 1 or 2 blocks over can drop, substantially. And that's, because it's in lava zone 2 or 1, and it makes it different. It makes it harder to finance on it, all kinds of things like that.
Well, how about West Hawaii? When you see something, it's kind of crazy low. What?
Well, and then the question is, does it, what's wrong with it? Does it have some legal lien on it or something like that, which makes it a little tougher to figure out. And some of them are easy, but some of them you kind of have to dig a little bit to find out what exactly is going on. That Lance has had a few of those that have definitely.
Well, and Jim just posted in the chat box too. Leasehold is one thing that we get called a lot on, right? And then flood zone is another one. Could be in a bad flood zone. So, but like you say, there's usually leasehold, lava zone, flood zones, the 3 big ones. Yeah.
Yeah.
And that's kind of just like piggybacking a little bit on some of the talk we had about median versus mean versus average and all of those things. That is kind of why, Robert, if you're still on this Zoom, if you listen to a lot of my market updates, I give like a lot of like warning, be like, take the data with a grain of salt, especially on the Big Island of Hawaii, especially in East Hawaii, because we do have outliers, but also we do just have like a lot of lava zones. Property here isn't as comparable in this market to other homes as like other markets on the mainland, where you go see a subdivision and all the houses are kind of the same. And you could say a 3-bedroom house here costs this much. We have so many outliers on Big Island. So we do give you these generalizations and these stats so you can see the trends, but you always have to take it with a grain of salt and always kind of look at every property individually, because there's so much going.
And I think I could add to that, this is why when they take the Big Island as a whole, it appears to be much cheaper than everywhere else. And then they come to the Kona side and say, wait a second, this is not that cheap. And your answer is, well, this is why, is because there's all these different areas. And this one just happens to be the more expensive side of the island. But if you look at the overall island, it's a lot lower.
Yeah. And when we talk about our monthly stats too, some months there's just not a lot of sales. So when you don't have that much data you're pulling from, you know, that really sometimes doesn't indicate a larger trend. So we you know, I try and give specific data, but then like bigger picture too.
Yeah. And that's the reason we do this too, you guys, is that we tell the story behind the numbers. So that way you guys have some context. Scott Wynn. It's like, okay, let's put that into what's really happening here. And then Lance has a good one. Lance, what's yours? I'm teeing this up for you.
Yeah. So I always get people to say they want to live in the tens. And for our new listeners, it's living in the tens. For every 200 feet you go up in elevation, you drop a degree. So I'm at 1,850 feet. So I'm 10 degrees cooler. I'm 10 minutes to the airport and I'm 10 minutes to Costco. So I'm living in the tens. And that's what a lot of people, they always want. Like, I want to live in the tens, Lance. I want to live in the tens. I'm like, I walked up and down my street and there's not a single new sign on it today. So I'll keep you posted though.
Yeah. Because that was the question that when Lance and I first started doing these videos, it was always, where's the best place to live? And then Lance came up with these tens, and then people, when they say, I want to be in the tens, I'm like, you watched that from 3 years ago. So, and then for mine is, do I need to be on the island to actually see a house? And you know what? When you have a unique home and there's lots of interest in it, I have found that the sellers actually say things like, has that person actually been in the house? Not just be seeing it through a FaceTime, actually having your feet on the land and showing up and seeing that you've actually seen the neighborhood and you've actually walked into the house has very valuable experience. They just want to know that you really know what you got yourself into, because we've and Lance backed me up. There's been some houses that have been falling out of escrow recently. And when you have put the time and energy into putting your house on the market and going through the contract, you want to make sure it sticks together. And having people who actually know what they just got themselves into by actually showing up at the house, I think, is a valuable aspect of buying a house here on the island.
That's exactly what just happened to us on, the 4 offers in on that house, and they were all close. They were at asking or above, and like we had wrote our super clean, but the other 3 offers had been in the house, and that cost us our deal. The listing agent was very gracious, and it's a big thing. So, the seller's just not comfortable. We didn't ask for cleaning or staking or surveying or anything. Did ask for a home inspection, but it was super clean. But it was just the fact, yeah, you're right. That happens a lot. And I do that all the time too. It's the first question I ask when I'm reviewing an offer is,
have they actually seen the house? Yeah.
Did you FaceTime them, or were they in there physically and touched it? And
Well,
I shared with the listing agent, I did 9 videos. I went underneath the house and went all around and from the street and everything. And yeah, it just didn't work.
Not the same. Yeah.
Eric? This goes back to the idea that it's so different from the mainland that you can't just say that was good enough. And neighborhood to neighborhood varies great a bit. A mile one way is, if you saw this neighborhood, doesn't mean it's going to be even close to what the other neighborhood is like.
Yeah. And just because also, even like I'm not disparaging East Hawaii, but just because you bought this piece of land that you thought looked pretty good on the video, you might be surprised when you get there, which you actually just bought. Amber, am I right? Yeah, we were talking to Dave, and he said that he brought this couple that hadn't been to the land ahead of time, and they were shocked at the condition of the road, and because they just thought that they were just buying a 10-acre parcel in the middle of Puna, and they didn't really have an idea of what it was taking to get there. So, yeah. So
yeah, I can tell you a funny little, very quick story. For those of you who are wondering about just shopping online. I do have a lot of clients right now that are still buying sight unseen, and they're doing a ton of research, and it's probably a solid decision for them because they're doing so much research. But I even used to have a neighbor on my block who was a real estate broker, moved from the mainland and came out here, and he said to me after about a year of living here, as a few houses down from me, he was like, did you, and I told him about how I bought my house kind of sight unseen at first, and he's like, but did you know about Puna and like how it was? And I was like, yeah, I did a lot of research online, like I totally knew, and I love it here and it's so great. And he's like, oh yeah, and he's gone, he sold his house and he's back on the mainland. So I mean, it's not for everybody, and there are definitely people who buy and do not do the research, and then they're like, wow, this wasn't what I thought. It's not for me.
Yeah.
Even a real estate broker.
Living on an island in general, it takes a lot of research. And when people say that they want to buy a house here and they've never been here, I'm like, you know what, that's probably not your best idea. And in fact, I have some people coming, they don't know where they want to live on the island at all. And I said, well, and they said, we should talk to a realtor. But before you talk to a realtor, come and look at the island and figure out which side of the island you want to actually be on and kind of spend some time so you have a feeling. So doing some research with boots on the ground, and also by doing a lot of the research, I've talked to people who watch these videos that we do for like a long time to get an idea what's happening with the market. And they also, you know, get a chance to ask questions. So the people who do the most research, I think, are the most successful.
And I'll add one thing to that. It's not only this island, it's which island, because, you know, you could say that Oahu is quite different than here, and Maui's different too, and Kauai. So it's one of those, if you've never been to, you know, we've had people that have never been to any of the islands, and you're like, whoo, and then, you know, at least, you know, if you could narrow it down, I mean, maybe a big city is more like what you want, you know, so just different places.
How many people knew that Maui has a lava zone 2 on it?
I thought that's extinct. Isn't it, Haleakala is not extinct?
Correct. Yeah, it's there's a lava zone 2 on there. They were trying to, and I only know this because they were trying to do the seller's real property disclosure, redo it, and people informed me that Maui has a lava zone 2 on it.
Do we know where that is?
I do not know.
Okay. I haven't seen too many eruptions in Maui. The last time, a couple thousand years. So okay. So we are up. It's 5 o'clock. So let's wrap it up. And thank you for all these wonderful people who give us their expertise and knowledge and time. Thanks, Lance and Marla and Scott and Amber and Eric. And we will see you guys next month. We will be coming at you guys on the 18th of May, which is the third Thursday. And Lance and I are actually going to be, and I'm going to talk to Amber about this too, doing the market updates a little bit early in May, because I'm going on vacation and Lance has to go off and do some things too. So, so we will let you guys know if you guys want more of these updates. We do have an amazing email list that Scott helped me with. And if you guys want to be on that email list, please reach out to me and give me your email address, and we're not spamming you. We're just going to tell you when these different real estate updates are. So give me a shout out at julie@ziemelis.com. And with that, we say aloha.
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 Aloha.